Today's topic is going to be swing trading the trend. Swing trading the trend. And again, my name is Dale Brethauer. You take a breath and hold it for an hour. I've been trading for, well, actually 35 plus years now. I'm a hedge fund manager, like Reed said, but I also have a educational website, www.optionsinfinity.com. I am not a teacher, I'm a doer. This is what I do for a living, and I teach it because I think a lot of people really struggle with how to make money in the stock market, and if you know some of the right things to do and some of the roadblocks to knock down, you also can become a success. It is not a get-rich-quick scheme. It's going to take a lot of time, a lot of hard work on your part. I, among others, can help you with tools and education, but really the ball lands in your court. If you want to be a success, you've got to put the time and effort into it. Now, what I'm going to be talking about today is, first of all, we'll talk about financially strong stocks. What are financially strong stocks? Why do these stocks outperform the market? Now, it's interesting because not only do these stocks outperform the market when the market is going up, but when the market comes down and these guys tumble, of course they're not all in the same market sector, so they don't necessarily follow the market. Some of them will be dropping when the market's going up, and that's a diverse portfolio. But when they do drop, they drop hard too. And that's an opportunity, just like my previous speaker was talking about. These are opportunities, and I like active stocks. And then I'm going to show you our list for 2016. Now, Reed's recording this, so you'll always be able to go back and stop this, but also you can go onto my website, which is, and I'll be showing you that at the end, www.optionsinfinity.com, and actually get this list. This list is updated every year right around the middle to end of March when I look at last year's cash flow from operation and update this list. It's usually around 20 to 25 stocks, and a lot of them stay on from year to year to year. I think this year when I was updating that, there were about 5 that fell off the list and about 7 that came onto the list brand new. So it is an evergreen document, but there's kind of a core that stays there for a long time. A prime example is Apple AAPL. Apple's been on my financially strong list for years. Then I'm going to be talking about how you trade these. How you trade these stocks. Again, you've got a small portfolio. I think it's best if you have a small portfolio that you focus on. And so you're not looking at, all 7,500 publicly traded corporations and trying to figure out which ones I should go with and which ones I shouldn't. Now, the indicators I use are pretty simple. It's the regression channel. It's the money flow index. It's the macro MACD, which is a version, it's the weekly version of the daily MACD that I've developed, and the RSG, which is my ready, set, go, and then Fibonacci extensions for the exit. And that's it. It's pretty simple. There's 2 charts I look at, a little bit longer term and a little bit shorter term. And I'm going to be going over these indicators, and I'm going to be going over how I use them. I'm going to be talking about how I leverage in the money options versus buying just stock outright. Now, my hedge fund and my personal account are fairly large, and most of that is in stock, but there's a portion in options. And today I want to focus on the options because I think most of the audience here is geared more towards options. Then Then we're going to go over 4 actual trades that happened this year. We're going to look at an Apple trade that started in February, ended at the end of March, 1st of April, when Apple was going up, and that was a 110% trade. Then we took Apple down starting on April 19th, and we just got out the other day. We got out on the 20th. So what do we have today? The 25th. So we just got out, and that was a 100% trade. Then I just want to show you Lulu. That trade was from December 15th last year to the end of January of this year, and that was 132%. And then we'll go over DHR, which happened from February to March. This is a very quick one, 25% on that. And these are winners. These are winners. Do I always win? Absolutely not. Absolutely not. But I keep my amount invested to a reasonable amount, and I base this versus the portfolio size. And on my website, I actually teach you how to do that for free. But today I'm going to go over these 4 that were winners. You are going to have losers. When the ribbon crosses over, and I'll show you that ribbon, I get out. I get out. And over the long run, my losers lost less percent than my winners gained. And even at a 50-50 number there, if you lose less than you gain, you have a positive expectation. That's what your goal should be. To get a strategy that has a positive expectation. You have a positive expectation strategy. It's just a matter of you executing the trade. Then I'm going to be going over my trading records from 2014, 2015, and today. And as Reed mentioned earlier, I give a lot of credit to Dr. Van Tharp, who is a trading psychologist. And he just recently wrote a book, not recently, but he wrote a book, and I'm gonna close by talking about how to generate income and what really is financial freedom, and why are you in the stock market to begin with. Then I'm going to give you an opportunity to join me on my website, www.optionsinfinity.com, as a free member. I'm not going to try to sell you anything today. And like my previous speaker was saying, I'd like you to look under the hood. I'm going to teach you stuff. I'm going to teach you the 3 major strategies that I use. I'm going to teach you, if you've never traded an option before, I'm going to explain what an option is. If you want to look more about the leverage of an option, I'm going to show you how to do that. All these are free webinars. I've got one on financially strong. I got one on how to set up your charts. Now, most of the charts I'm going to be showing you today are from Thinkorswim. I'm not affiliated with them, but I think they're one of the best trading platforms out there. Not only as far as trade execution, but the amount of tools that they have is just mind-boggling. The regression channel alone, I used to spend hours and hours hand calculating regression channels. I've been using this for many years. Now it's just a click of a button, which is really awesome. There's a free webinar on there about the proper trade size, trading psychology, regression channels, Fibonacci, measured moves, and so forth. And I'm going to show you that towards the end. And that I'd like you to all sign up for free and take advantage of that free education. Then if you want to become a member, it's like looking over my shoulder, and I'm going to show you what I'm doing with the financially strong stocks and with the theta trades and occasionally with a weekly option, and show you what I'm doing. And that's a nightly video blog. But I want you to feel comfortable with me first and what I do, and then you can take that next step. this is a chart I made from bigcharts.com. Bigcharts.com, and basically what I did is I took 3 financially strong stocks, Apple, Nike, and McDonald's. And I charted them for the last 10 years versus the SPY. The black line here is the SPY that has been normalized, so that what you're looking at on the charts above are how did those stocks perform versus the SPY or the S&P 500, the market. How did these perform? They outperform the general market. That's it in a nutshell. They outperform the general market. Take a look at Apple. Now remember, this is the SPY normalized. So at this point, if the SPY is up 100, this will be up a 10x magnification of that. All right? And it goes up, now look, it goes up to a 10x, and then it drops to a 6x, and then it goes up to a 14x, and then it drops to a 10 to an 8x. That's a lot of puts and a lot of calls and a lot of puts versus a normalized SPY. Now Nike's similar, but look at that nice smooth curve as it's going up to 600% or 6x better than the SPY. I mean, just investing in these stocks and letting them go, you're going to do better than you would with the market. But then when you put some indicators on there and get in and out with some puts and calls, wow, it really is a nice little opportunity. You can see McDonald's was not quite as good as the other two, but even McDonald's is up 250% or 2.5x over the 10-year period versus the SPY. And that's what we want. We want financially strong corporations. And right now the list is 22 out of the 7,500 publicly traded corporations. I've done the work for you. I scan through the best market sectors. Then I scan through 10 to 15 stocks within that market sector to pick out the best of the best, and that's what the portfolio is. That's our market basket. That's where we start. Now, what am I looking for? I am looking for a positively trending cash from operations. That's this blue line. That's this blue line. And you can see from 2011 to 2015, it's gone from about 40 billion to close to 90 billion. That is a positive trending cash from operations. You probably don't hear about cash from operations too much because it's a term that businessmen know a lot about. It's the actual money that the corporation made, not the net income. Because the net income, you take out depreciation so that you don't have to pay taxes on it. So the net income is usually only a portion of the actual cash that you've made. Don't you want to know how a company, what their actual money was that they made? Not just their net income, and what the trend has been. And that's what you do when you look at cash from operations. Here's the list. Now you can go to the website and get this list. You can copy them while I'm talking here. Or like I said, Reed's recording this, so you can go right to my recording and stop it and write these all down. Quickly, it's there's a couple that I trade with credit spreads because they're the big boys, and that's Amazon, that's Google, It used to be Apple, but now Apple, when they had the 7-to-1 split, it's back down to a reasonable stock. These are the big boys. The rest of them are around $50 to $100. I don't like real cheap ones. Clorox is only like $28 a share. You don't get the kind of leverage on an option that you do if it's like $50 to $75 a share. So on the for trading options, I don't really look at Amazon, Google, or Clorox. All the rest are fair game. Amgen, Apple, Cisco, Coca-Cola, Corning. Corning is also relatively cheap. Danaher, DirecTV, which has just been bought over by AT&T, which is the ticker symbol T. Disney, Gilead Science, Home Depot, McDonald's, Microsoft, Nike, PepsiCo, Pittsburgh Plate Glass. I had a job interview with those people a long time ago. Excellent company. Obviously, I was born and raised in Pittsburgh. Priceline, Procter & Gamble, Starbucks, and Verizon. This is my current market basket. This is the way my chart program looks, and it's pretty simple. There's only a couple things I look at. I keep it simple, and it's very easy to follow. The two charts I have, one is the 1 year weekly on the left-hand side, and 6 months daily on the right-hand side. What I have here is the regression channel. The regression line in purple is calculated by taking 50% of the price below and 50% of the price above at any given time. The green line is then plus or minus 1 standard deviation, and the gold line is plus or minus 2 standard deviation. Statistically, price will be contained, 95% of all prices will be contained within a plus or minus 2 standard deviation. Yeah, occasionally you have outliers, but it's going to come back. This is like the meat inside a sausage casing. Very seldom does it go out. And the further away it gets from the magnet, the harder it pulls to get it back. And it'll always overshoot. And then it comes back again. And then it overshoots. And then it comes back again. This is one of the best tools that I have ever used. The regression channel. The regression channel. Now, on the left-hand side, if this is over, right now I see that Microsoft is oversold. There's some support down here for it. It's oversold. And the money flow is starting to come back into the corporation. This is not only price, but volume and the number of shares outstanding. So if it's down here and it's oversold and the money flow is starting to come back in, I go from the left-hand chart to the right-hand chart. Only if if it's overbought or oversold and the money flow is going in the direction I want to trade, do I even look at the right-hand chart? Okay, the right-hand chart is, and you'll notice I use candlesticks. I love candlesticks. It not only tells you what the open and close was, but who won the day. If it's green, the bulls won the day. If it's red, the bears won the day. And that's good stuff, good information to have. This is the daily version of the weekly MACD, and I'm going to talk about that a little bit more in just a second. The other thing I look at is the 5, 8, and 13-day exponential moving average line. And then the last thing I look for once I'm in a trade is when should I exit? And I exit when I get a Fibonacci extension that says, hey, this is overextended. Rita's saying, how does this compare to the Keltner channel or Bollinger Bands? This is a little bit more accurate. And what I would say, Rita, is go ahead on your chart program and put in the regression channel, put in the Keltner channel, put in the Bollinger Bands. And you'll see this gives you a better picture of not only the trend, but you know, occasionally on Bollinger Bands and Keltner channels, you're going to see it go outside. Doesn't happen very often on the regression channel because statistically, you've got 95% of the price contained here. That's not true with the other two. Try it though, Rita. Try putting those on. That's a good question. That's an excellent question. Okay, so over here, once I come over to this chart, I'm looking for a change of color. I'm looking, and the first day is a ready day. Then I'm looking for a higher high if it's green. That's a set day. And then I'm looking for continuation the third day. That's a ready, set, go. And off to the races I am. And I stay with it until I make a profit with a Fibonacci extension, or the ribbon crosses over to the downside if I'm trading calls. And that's it. That's it. Pretty simple, huh? It's easy to understand. It's very difficult to master. Very difficult to master. Take your time. Take your time. Paper trade it. What's your hurry? Paper trade it. See how it works. If you can't make money paper trading, don't use real money. And if you have a real good trade with paper and you go, oh, I missed it. I could have made a lot of money. There'll be a time when you can. These happen all the time. Don't be in a hurry. Be patient. Let's talk a little bit about the MACD. The macro MACD is the daily version of the weekly MACD. The MACD line is really the 12-period exponential moving average minus the 26 period. And then the MACD signal line in red is the 9-period of that. And you take the difference of the two and that gives you a histogram. And that's what I do then. This is the daily histogram. What I do is I multiply that by 4. Yeah, I know there's 5 days in a week, but I've tried 4, I've tried 5, and 4 works the best. Okay? And you don't get very many whipsaws with this like you do with a daily MACD. Let's take a look at why I use in-the-money options. Because I've got 6 to 8x leverage if the stock is right around $50. The example I'm going to use here is Microsoft. Let's say I bought 100 shares of Microsoft at 49, which it was February 9th of this year. That would be $4,900 for 100 shares. Yes, indeed, it was up by April 19th to 56, and that was a gain of $700, and that's 14.3%, which is not bad for 2.5 months. Not bad at all. Now let's compare that versus buying a 10% in the money call. The reason I like in the money is because it has a delta, and I'm not going to teach you about the Greeks right now, but it has a delta of 0.8, which means that for every dollar the underlying moves, the option's going to move 80 cents. So you've got an instrument that's cheaper, but yet it moves the same as the stock moves. Okay, so if I buy a 10% in the money call on Microsoft, what I would do is get a June, I go out about 60, 70, 80 days, somewhere around that. I got a June 44 call that only cost me $6.73 or $673 to control 100 shares. I have the same control with this as I do with this. This $6.73 went to $12.40. You had about the same profit. If you take the 700 times 0.8, you got this number. It's very close. This was actually a little bit less than that. But now you're comparing 84% versus 14.3. The leverage of in-the-money options. Now, a lot of people say, oh, options, they're bad. A lot of them expire worthless. Yeah, the out-of-the-monies do. The out-of-the-monies do. The in-the-monies, it's a whole different story. Now, when I trade credit spreads, I trade out of the money. When I trade directionals, like we're talking about today, I trade in the money. Let's talk about 4 actual trades, and let me walk you through them step by step. And the steps are pretty easy, and you'll notice the charts. Over here on the left, I've got the 1-year weekly. Over on the right, I got 6 months daily. Okay, and this was during the time period of February 9th, which was right around here. You can see it was oversold. Had some support here. Oversold. Money flow was coming into it. It gave a couple false starts, and then it had a change of color. Ready, set, go, and I got in on this day right here. Pulled back a little bit, then it was off to the races. Off to the races. The ribbon crossed over. The 5 and the 8 were above the 13. And as long as it stays that way, I let it run. You got to let it run. If you're on a good stock, and it's going in the direction you want it to, you got to let it go. Stock does not just go straight up and straight down. You can't be freaked out by this. That's the way the stock market happens. Let it go. Now, if it penetrates down through here and this ribbon turns around, then you want to get out. But as long as this ribbon holds, you let it go. And I finally got out when I got a Fibonacci extension of 261 right on this day here. Yeah, I could have made more, but I was happy with this. That was 110%. And that's right here. And now what am I doing? Now what am I doing? I'm waiting patiently for a put opportunity. Ready. Ready. Well, first of all, it's overbought and the money flow is coming out. Then we have a ready, set, lower low, continuation, go. Notice the ribbon. 5 is under the 8, is under the 13. Down it goes. Whoosh. And I actually stayed in until right here when the ribbon crossed over. In other words, I gave a little of it back, which is okay. I mean, if you've made a bundle of money, it's okay to let it go and see if maybe it will kick off here and kick down, which happens a lot. But when it crossed that ribbon, I was out. I was in for about a month. It was 100% trade. Okay. This is an actual trade started the middle of December last year on Lulu. Here's where it started. Now, it came down and it was oversold right in this area, okay? But what's it doing? The money flow index is still going down until right about here where it starts back up. It starts back up. Right there, you want to go over to this chart. You look for a ready, set, go. You're in Lulu. It follows the ribbon up to the 161.8, which put it up around here, which is close to the being overbought on the regression channel. I'm out. I'm out. Johnny, excellent question. How do you handle earnings calls? I do not trade preceding earning calls because you never know what's going to happen. you never know what's going to happen. A lot of times the earnings will come in and it'll just blow the estimates out of the water, and the stock will tank. Because the stock market is not looking at what happened, what has happened. It's looking at what the CEO's talking about for forward guidance. And if they're bearish on forward guidance, even though they did very well on earnings, that stock's going to drop like a rock. So I always get out before earnings. Or if I'm looking to get in a stock and it's, let's say it's over, well, here's a good example. Would I get into a put on Lulu right here? Absolutely not. Even though it was overbought and the money flow was starting to come down, I waited till after the earnings. And then I give it a couple, 3 days, take a look at the charts again and say, well, okay, what effect did the earnings have on it? And do I have a trade now? So I won't get into a stock before earnings, and I will exit at least 2, if not 3 days before earnings, the earning call. Okay, Johnny? Good. Do you ever adjust your directions, Rita says. If your option is a loser, will you add to it? I never throw good money after bad. Never. I don't have tomorrow's newspaper. If I analyze a stock and I get into that stock and it goes against me and the ribbon turns around and it goes in the opposite direction, I'm out. I am out. I'm not going to let my ego drive me and say, hey, how dare the market trade against me? I'm gonna double up my position. No way. Never throw good money after bad. Okay, excellent. And the last one I have is Danaher. And this was a very quick trade. This was an in and out. And I left a lot on the table. Which I later came back and grabbed some. But let's go through it step by step. First of all, it was oversold. The money flow is going into Danaher. Now I go to the right-hand chart. What do I do in the right-hand chart? I look for a change of color. Ready, set, go. Ribbon had crossed over, and I followed Danaher on up. Now, Danaher quickly jumped up to the 161 on the Fibonacci right around here, and I got out. I got out with only 25%. Only 25%. Pretty sweet. And sure enough, it retraced back. But notice it never penetrated through the 5 and the 8, never went through the 13. This is what I call a trampoline. It bounced off that 13 and pushed up again, and right here it made a higher high. Time to get back in. Okay? And now you have a new Fibonacci based on this move here. All right? So, again, those are 4 winning trades, but I wanted to show you those because I wanted to show you how simple the process is. And this is what I do on my website. I go through, every night I go through potential trades that I'm looking at that I'm either in later in the day or going to get in the next morning. Okay, and basically what I do is I just look for things that are overbought, oversold, money flow going in the direction of the trade I want to make, look for a change of color, ready, set, go, look for a ribbon crossover, I'm in. And then it's just a matter of taking profits from the Fibonacci extension or exiting on a ribbon cross. Pretty simple. And it is a positive expectation trading strategy, and you just have to master it. and the more you do it, the more your confidence will grow, and the easier it is to pull the trigger. 2014, I decided to do a double up challenge. I wanted to see if I could double my money in 1 year. And I took a $25,000 portfolio, and no, I wasn't investing $25,000 on each trade. It was only $1,000 per trade, and I never compounded. And these were actual trades from my blog, my nightly blog. And at the end of the year, just notice I don't have December in here. Now, I think I was going to say, I thought I ended with about 150%. Compared to, the SPY was up 12, 13%. But compared this to that, and the other nice thing, I had no losing months. This had this only had 2 losing months. Okay? So you look at that thing and you say, well, my goodness, why aren't you going gangbusters on this? Like I said, a professional only trades a small portion of their portfolio on any given trade. So how did I do in 2015? It was only up 85%. And how am I doing this year? I'm only up 39% to date. Pretty doggone good. I'm pretty proud of that. So you match your weekly chart uptrend with the daily chart. Do you advocate taking some profit off before the ribbon crosses down? No, I do not, Rita. I'm either all in or all out. That's just the way I do it. Now, a lot of people modify it, and that's okay. That's okay. You got to make it your thing. A lot of people pyramid. A lot of people take a portion of it off. I'm either all in or all out. That's the way I've been doing it for many, many years. I've been extremely successful. This is what I do for a living, and I'm not about ready to change it. Yeah, I will occasionally change some things because the market does change slightly, but not a great deal. Not a great deal. Do you use different charts, time frames for stock versus options? Yes, I do. Yes, I do. And I use a different chart setup, a different time frame for weekly options because they're quicker. They're quicker. So I'm looking at 15 minutes. And I'm not necessarily, every one of these uses regression channels, every one of these uses Fibonacci's. Those 2 tools I use for everything I do. When I'm trading theta trades or credit spreads, I'll use a little bit more than the weekly. I'll use the daily chart, but a shorter period of time. Every one of my strategies has a different time that I'm looking at, Johnny, but they're pretty much identical. Pretty much identical. Rosa says, do you have a formula for day trading? I don't day trade. Yeah, occasionally I'll have a trade that I'm in and out, and that's usually when I'm trading a weekly option. But I tried day trading for a while, and I was okay with that. But you know, at the end of the day, it was like, what did you do today? I watched bars go up and down on my chart. And I had a lot of anxiety watching them, pull against me, and I said, this is not for me. This is not for me. So I don't even day trade now. Occasionally I will have a day trade on the weekly options just because I get a real nice move, and it's like, why not take that profit? Okay, let me just share this with you. This is a thought from Dr. Van Tharp, his book, Trade Your Way to Financial Freedom. Financial freedom is really a new way to think about money. Most people think they win the money game by having the most money and most toys. If you want to be a success in the market, First of all, you have to have a realistic expectation of what you want out of the market. You have to be patient, and you have to trade only a small portion of your portfolio. And think about this. Financial freedom means that your money's working for you. The money working for you makes more money than you need to meet your monthly expenses. That's a pretty good start. If you could do that consistently, wow, that would be a nice little goal to set for yourself. And now, here's the caveat. Doesn't mean you won't spend hundreds or even thousands of hours building the foundation for your financial freedom. Read a book one time, it was called Outliers, and they talked about professionals. When you see a professional golfer swing, it's like effortless. Any professional, when they're executing their trades, is effortless, because I've spent hundreds of thousands of hours researching, studying, executing trades over many years. It's not going to take you that long, but it's not going to happen overnight. It does mean that financial freedom is possible once you lay the groundwork. And now here's the thought. You go to a financial planner and they're going to say, well, you can't really retire because you don't have a big enough bank account, versus strategy that gives you consistent cash flow. Not every month, but the equity curve is going up, That's just a little different way of looking at things. You have to be realistic. Okay, how do you learn more? How do you learn more? Okay, let me show you my website. The website is www.optionsinfinity.com, and I think Reed will put that in the chat box, so you've got that for future reference. This is the home page of the website. What I want you to do when you come in here is click this button, start a free membership. Start a free membership. The only thing we're going to ask you for is your email address, and we're not going to bombard you with stuff. Just set up give your email address, you set up your own password, and you're a free member. Okay. Here's some of the free stuff you get. These are the 3 strategies that I use for trading options. You just heard a little bit of following the trend. Here's the one on credit spreads. Here's the one on trading weekly options. Free, free, free. Options 101, options leverage, financially strong stocks. Chart setup, your proper trade size, trading psychology, very important. The macro MACD, regression channel, Fibonacci, and measured moves, okay, and much, much more. Once you do this, it kind of opens the vault to a lot more information. Then if you like what you see, and you want to look over my shoulder as I'm trading these 3 different strategies on my market basket of stocks, you can become a pro member. And that is $49 a month. $49.99, I think, a month. Recurring. You can stop anytime you want. When you start, you're going to get the first 30 days for half price. So really what I'm saying is, come join me for free and glean all the free education you can out of there. And learn it and see if it makes sense to you. And then spend $25 and listen to me for a month as I trade my portfolio. And then if you like it, continue on as long as you want. Now I also do webinars once a week where you can talk to me one-on-one. But that's the first thing I want you to do is just join me for free and see if this makes sense to you.